Hold on a second, I gotta fix something. Good morning, everyone, and welcome to the Quantum Leap morning homework session and trade plan set up for Wednesday, February the 9th, 2014. If you're visiting us from Twitter or watching this video on YouTube, we are Quantum Leap. We're a self-organized learning environment. We come together each morning to do morning homework session and set up our trade levels for the ES and our targets for the day. If you're interested in checking out Quantum Leap, it is a private chat room. You'll need a Skype account, and you can send me a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. So each morning we come together to get prepared for the marketplace. If you're watching this video, we start from looking at the macro to the micro in terms of the numbers, in terms of the trend, and then we drill down and do some more in-depth chart analysis where we put our trade levels and our targets in place. Before I get going, I have to get the legals out of the way. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves the risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than their initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own plan, do your own due diligence. All right, so let's take a look at the numbers and quickly go through them. Of course, the big number, the big battle yesterday that they were fighting right to the very end was the year open at 1837.75. We closed yesterday one tick below that at 1837.50. So the bears won out, and currently we're trading down at 1833. So we are still in this bear year. Big target above, obviously, is the year high at 1845.75, and of course just above that you've got the all-time high at 1846.50, which was December's high. Just taking a look at the numbers, we've got a new low. It's actually 1830 put in overnight. That was the Globex low so far. Yesterday we opened up the Globex 1836.25. Had a high of 1839.75 and a low of 1832.25, and we opened the RTH right 3 ticks below that year open. We did end up going and taking out that 39.75 and that 32.25, so we took out both the overnight high and the overnight low yesterday. We had a 3.5 point opening swing. Anything more than 2 points on your MOO or market on open orders, opening swing, you're looking for a rotational day. And we were anticipating, our main hypothesis was we're going to see a rotational day with the slightly upward biased. Initial balance high, which is the first hour high, 39.75. Initial balance low, 1831.50. So they went and tagged that overnight high at 39.75. And then later in the day, we went up to that 1840 and one ticked it and then fell off of it. Initial balance 8.25 range, pretty normal. Normal range is between 6 and 9. All our RTH numbers were higher. You can see we've been trending up. We did have a lower RTH low, so a little bit of sign of weakness. And then of course overnight we were net short. The value area high, value areas were higher, so the value area high 39, value area low 36 for a 2.5 point, very tight. Once we got up around that 1838.50 area, we just sort of went sideways as we battled that 37.75 year open. And then we had an initial balance break at 1033, way outside of the pocket. Again, we've been experiencing these late breaks lately as we expanded the range. Current 20-day ATRs 1820 on the RTH, 24 on the full session, and just under 14.75 on the Globex. Let's take a look at the daily report. We've got, so far, we've got our full session high at 38.25, full session low at 1830. It is the Globex, I know that, but Right now, that's the only full session we have. And currently, the ATR 20-day target to the upside is 1854, and to the low side, 1814 and a quarter. Take a quick look at the news. Of course, we had building permits and PPI, and gave us a little bit of a spurt up. Closed that tech gap that we had on the 5-minute. Went up and tested the 20 SMA on the 30-minute, and currently, right now, we're struggling to get above that. Big news, of course, later on this afternoon is going to be the FOMC meeting. I'm really anticipating just sideways horizontal development today until we get to the FOMC, and then see what that spikes up. Let's go over, take a look at the trends, macro to micro. I always start with the monthly. Good slope, good separation on the 9 EMA and the 20 SMA. Came down, closed this little technical gap, bounced off it, and we're trading near the highs in the upper distribution on the previous 2 months. On the weekly, same thing. We'd come down. We had weakness coming in. It looked like we were going to get a close below the 20 SMA, which would have been the first one this year, but they bounced back up, got above the 9 as well, and we now are getting some slope, getting a little bit of separation. Trend is still very much intact on the weekly. Going to the daily, we still have that naked close, naked cross down here at 1794.75 area. So make sure you've got that noted. We do have a technical gap going still on the daily. We didn't close it out the last 2 days, the holiday or Tuesday. A gap close will bring us down into this 1820.50 area, probably more likely that 2250 CHVN, and we'll take a look at it. But we've got slope and separation, and the daily is still looking strong. Just jumping over to the geometric chart. There's 3 forks on this chart. There's the long-term fork we've been following, where we've been trading in the channel until we had this first breakout below the lower line of the long-term upward sloping fork. Then we have the opposing downward sloping fork and this new fork that I added last week. We talked about the fact that we had broken inside of the lower line of the longer upward sloping fork. I can say that. And we were coming up and tested the upper line of the downward sloping fork and broke above it. So we were looking for us to come up and test this upper line of the intermediate fork that I drew, and you can see we've been bouncing off of the upper line, and currently we're coming down. We do have this energy point still due on or about the 25th, 26th of the month down here at the 1817 area, so we're still within range of hitting this energy point. Test of the 9 EMA and the upper line of the downward sloping fork will take us down into that 1820 level. If we break out of this fork, you've got to look for this blow off top, and that we've been talking about as a possibility. Just take a quick look at the intraday trend coming into the RTH. 4-hour trend is back in, and is intact. We've come down, we've tested the 9 EMA, closed this technical gap. Basically, we closed this tech gap by time, a little by time, a little by price, but mostly through consolidation and time. But we do have separation. We're losing a little bit of slope here, but so far the 4-hour is intact. Going down to the 30-minute. 30-minute, we were starting to, start a trend down, had this technical gap here, came up, closed the gap. We're now above the 9 EMA, tested the 20 SMA, and we've got a MA squeeze going on where we're trading in between the 9 and the 20. So trend is there is no trend on the 30 minutes, basically consolidating sideways. Going down to the 5-minute. 5-minute shows a little bit different picture. After the news, we popped up and we're getting slope and separation on the 5 minutes. And coming into the RTH on the 5-minute, we're starting a bit of a trend upwards. So let's go and take a look at the macro. We were down in this balance zone between November the 14th through to the 19th, and we broke up, went and made the all-time high at 46.50, chopped around here, tried to go up and make a new high, hit the year high at 1845.75, couldn't hold, but the last area they were trying to hold was at 1838.75. Then they fell out, went all the way down, okay, hit our lower targets at 1832.50 right to the tick, and found the buyers that we were looking for, and then slowly worked their way up, stair-stepping their way up. So the 2-day composite right now, we're back inside of this balance area in around that 1832.50, 1832.25, and the last 2 days most accepted price is back up at that 1837.50. So we're back to trying to hold value higher, and we were talking about that 1834 yesterday being key. If we got below 34, we were looking for rotation back to find buyers at the microcomposite VPOC at 1832.25, with a possible push through down to the other side of that balance at 1828.25, and the value area low from yesterday, which was, I think, 29.50 was our immediate target and trade zone below. So, but then we moved back up, and we basically fought the year high, or the year open, all of yesterday, and we just basically chopped around that 1837 to 1838 area, and they couldn't actually go and make that new high. Overnight, they fell off, broke below the 34, and came down to 1830 in this distribution zone right here. So same areas. I mean, it's pretty simple with the setups today. You've got the 34 as a key line in the sand above. Anything above 34, you want to get long into the 36.50, which is the CHVN and this upper distribution, with a move to close out the gap at 37.50, our close from yesterday, and a move to test this microcomposite VPOC from below at 38.50, with a possible move to test the other side of balance at 1840. If we get above 1840, then I think we're finally going to get that move to take out the naked close at 46, take out the year high at 45.75, and make a new high by breaking the 46.50. Below 34, you're going to look for chopping around this 32 area with a push down to test the lower boundaries, and the other side of balance down here at 1828.25. Everything below 1828 puts us outside of the distribution up here around 32, and likely to get a push down to test the 25.75 area, with a push through to the other side of that balance down here at 23. And remember that the value area low for this larger distribution that went from December the 23rd through to January the 23rd, for a month we traded in this area, and the value area low, or 70% of all the volume, happened above 1824.75 value area low, and below 1840.25, the value area high, and that's been our distribution. And right now we have these two major price acceptance points at 36.50 and 32.50. We're likely to play ping pong between the two of them for the next little while, if we can hold above 28. If we get below 28, we're looking at it coming down and testing that value. And if we break below the 23, we're outside of value, and we're outside of this distribution, and we're likely going to get a bigger retrace, come down, test this 1850 CLVN, the CLVN that we were trading off of last week, and come down to this 1814.75, which is where they accepted value once they broke out of this balance area down here. So they broke out, accepted value here at 91, 92 area, continue to break out, held value, accepted value here at around 1814, 1815 area, broke inside of the prior range, came up here, and they've been trying to hold value and get above that year high in around that 1838.75. But if you ask yourselves how good of a job they're doing, they are failing to get above the other side of that balance at 1840.50, and therefore they ran out of inventory, and they've got to come down and find buyers with more conviction. Where's the first likelihood they're going to do that? 1832.25, and then possibly a push through to test the other side of the balance. So let's take a look at the overnight and start moving our numbers over. Our overnight high, 1835, 1838 and a quarter, one tick below that 1838.50. And one tick below the VPOC from this P-shape. You can see we had a P-shaped profile right here. This is generally short covering. You know, typically after you get a P-shape, you get a push down to test the lower distribution and do some repair. You can see we've come down into that area. Our overnight low is 1830. And our overnight VPOC is 1835.25. So if we hold above this 3150, we're going to open up in range. Let me get rid of this. I'm going to expand this out. We're going to open up inside a range in this this lower distribution that is this very thin area and not properly auctioned. Remember that on Friday before the holiday we had that triple distribution day. And anytime you get a double distribution or a triple distribution, you have a possibility or probability that you're going to go test these other distribution zones. So we thoroughly came up and tested Friday's upper distribution. We're coming down, and that LVN from the upper and the lower distribution in around that 32.75 with the HVN from Friday and the IB high at this 1831 area, and we've come down and tested that. You've got an LVN here at this 1827.75, but I'm really looking at that 1828 area. If you look on the composite, that's the other side of this balance right now that we need to hold in around this 1832. So 1828.25 is going to be an area that I'm going to look for responsive buyers to step in. So I'll be looking for that to be an area of support. And then if we break that support, the immediate target below is that CHVN at 1825.75. So that's going to be the main target below, with the other side of balance and another trade area that I'll be looking for them to hold. It's really 24.75 because that's the value area low, but I've got to look at longer term and look at the CLVN at 23.25. So I'll be looking in between that 23 and a quarter to 24 area. So I'm just going to put the trade area right there, and then below that everything shifts down to that 22-21 area, and that'll be our extended target below. It's not really extended target, it's just a secondary target at 22 and a quarter, with the other side of balance being down here at 1850. And then the extended target will be that 20-day ATR target below at 1814, and this naked microcomposite VPOC at 1814.50. See how those two things play into correlation with each other? And this will be our extended target. Okay, so that takes a look at our areas below. We're currently holding this 31 area. Of course, if we break out a range from yesterday, I'll be looking to trade that with a break below to target that overnight low. Come on. So if we come down and we can't hold value, remember you've got a 96% probability of taking out the overnight high or the overnight low, 28% to take out both of them. We took out both of them yesterday, but since we're trading in the lower distribution and we're having trouble staying in the upper distribution, I have to think about the probability that we're going to try to break out a range here and come down and take out the overnight low and test that 28 and a quarter area from above, and look for response to sellers to stay to step in and take us back up to test the range low again and get us back into yesterday's range. If we hold 3150, then I would be looking to come up and test the LVN around this upper distribution from yesterday, which is just going to be right there at the 35 area, but we've got to get back above this 34 CLVN. So 34 is going to be an area that I'll be looking for possible responsive sellers to step in to hold us down in this lower distribution and keep us outside of this CHVN zone around that 3650. If we can get above 34, then I'm looking for a move to the halfback and the CL or the LVN from yesterday at this 1835.25, and that's going to be my first target area above. And then if we can get above that, I'm looking for a test of this 36 and a move up to this CHVN at 3650, which is also our value area low. And that will be an area that I'll be looking for possible sellers to step in and hold us outside of that value. Once inside of value, if we accept value again, everything shifts up to coming up and testing this 38.50, 38 and a quarter, and taking out the overnight high, and a push through to take out the other side of balance up here at 39 and test the other side of balance at 40. Excuse me. So you really have to watch this area between 39 and 40. So I'll be actually trading off of this 39. I don't know why my voice is doing that. And then a breakout above that, I'm looking for a push through to get us above this 40.50 CLVN, get us back outside. Remember, that's also the value area high. So you got all this confluence around 40, and above that, the initial target is that 42 and a quarter, with the push through to take out the the naked cross and the all-time high up at 46. I thought we had a naked VPOC up here as well. I'll have to do a download. I thought we had a naked VPOC still at 45.75, but that is the extended target to, or not the extended target, the secondary target above is going to be that 45.75 year high with the 46 and 46 and a quarter, 46 and a half. And then the extended target to the upside is that 20-day ATR target. It was 56 yesterday. It is 54 today. So 54 is our extended target to the top side. And possibly this blow off top that we could be seeing. So that's everything that I've got for my levels and targets. Let's take a look at how that fits in terms of the Keltner. Keltner center line is going to be 33.25, so basically look at that 34 level CLVN, and a move up to test the upper Keltner is going to bring us up to test this 39 value area high. A test to the lower Keltner line will take us down to test that 28 27 area. It's really 28 and a quarter that I'm looking, but it's showing here that it's likely to be in around 27, but by the time we get there it could be a little bit higher. Let's take a quick look at gold. Again, gold is, we've got to look at this pattern that's setting up. We've got the longer term bottoming pattern, which is a descending, broadening wedge. Then we've got this potential cup forming here. This was the 61.8 retracement off of the swing high. So we went down, hit that low in around 79.40, rotated back up to the 61.8 retracement, and so far, we are rejecting it, and we're looking for a possible move down to validate this cup, which would need to be down into that 1275 area. Between 1275 and that 1240 area will validate this this cup and set the handle up, and then we'd be looking for the break above the right rim and above this 1335 area for a measured move. And the first measured move is up to that 1434, 1435 area, with the bigger move, which is the actual measured move off of this. I think it's 14. Let me just measure it real quick. I think it's 1490. If this remains our rim, 1484.70 would be the 100% target, but I'm going off of this target right here, which would be the 100% extension or retracement, and into this area where we failed from before as my target above. But the measured move on the cup and handle actually takes us a little higher to 1484. So let's take a look at what that looks like on the gold composite. Man, I'm going long again, aren't I, Howard? I'm so long-winded when I get into this stuff. So right now we are 3-day, and we'll bring today in. Our 3-day microcomposite VPOC is right around that 1323 area. You've got the naked close down here at 1320. The key line in the sand is really down here at the 1300 level. If we get below that 1300, then we're looking for that move down into this, testing this, this balance area down here in around that 1276, 1275 area, which will validate the cup and handle formation with a possible move all the way down to this 1240. And this 1240 would be the lower extension, or the largest retracement that you want to see for that cup and handle. If we break below the 1240 area, then we're going to invalidate that cup and handle and probably see a move down to this 1226 area again, this naked microcomposite VPOC. But the overall microcomposite VPOC from this whole balance zone is still all the way down here at that 1240, and that fits perfectly with the cup and handle and the formation of that handle. If we still have the possibility of going higher, even with the forming the right rim. Right now we have a lower right rim, and we can certainly go higher and still have a possible cup and handle. I just drew it the other day because of the fact that it was at the 61.8 retracement, and we were getting some resistance there, so I wanted to see where the targets were. But it can set up with a lower right rim. They often do, but we still have room to go up higher and still, form a higher right rim or more equal rim around, that 1362 area, and that still would give you the formation of the cup, and then we look at what the retracement would be for the possible handle. So above right now you've got 1337. Above that I'd look for a continuation up to test the bigger other side of balance, and CLVN at 1351.60 with the immediate target above that at that 6190, 62 area. And then if we do get into this upper distribution and they just keep going, the big target above is that 1386, 1387 area, which fits very well with the cup and handle that's forming. Even if we get the retracement, we come up and break the right rim, we can get a move up into that 1386, 1385 area. So that's what I'm looking at. Howard, do you have anything to go over with us?
I could just cover a couple of brief things.
Okay. Over to Howard.
So we'll just take a look at a couple of market breadth studies that I look at. This is a look of how all the sectors that I follow have been doing since the beginning of the year, which is right here. And still leading the pack are the utilities. And I believe last year they were among the weaker sectors. But it looks like all the sectors, have been participating in this rally. And then just recently, XRT, which is the retail sector, has not had the same enthusiasm as the other markets. Whereas last year, XRT, the retails, had had the leadership for most of the year. So possibly after the holiday season, they have a little slump at the beginning of the year, but they have a bit of a gap between themselves and the next lowest sector. And there's just utilities at the top. We have healthcare close behind. Technology is above where they opened, and then we have materials, XLB, just poking their heads above break even for the year. So just those four are at or above their opens. All the other sectors are still below where they opened the year. And then the lower graph, we have the transports in pink and the Dow Jones Industrials in cyan. And they're following pretty much the same pattern they did all of last year, where the transports were leading. So they're still ahead this year, but both are below their open. So next we'll look at the advanced declines versus up-down volume. Okay, so up-down volume in the lower chart on a 10-day average basis, and advancers versus decliners on a 10-day average basis also in the middle graph. Both bottomed on January 29th, and market breadth has been expanding. We made our high here, so it looks like over the last couple of days we've made a double top here in advanced declines. So let's go back just a little bit in time. But the actual high actually occurred back on December 22nd. So we've been having a non-confirmation since this time, where market breadth was declining while price was still rising. Made one push higher to a lower high back on December 27th, and then weakened again, made their bottom over on January 29th, and then the market's been getting stronger up until February 14th, last Friday, and it's actually showing a little bit of weakness coming in, so it'll be important to see if this high holds over the next several sessions or not, and whether it agrees with the direction of price over the next several sessions. So if this turns out to be the next swing high and market starts to weaken from there here, then that would indicate that price may continue a little further or it may go with it. So that's what we'll be looking for going forward. So this session has run a little bit over, but we did start a little bit late. We have about 6 minutes to open, so I'll turn it back over to you, Doug.
That's going to complete our morning homework session and trade level setup. We are trading right now. Looks like we're going to be battling this range low from the prior day. So, look for failure here and a break below to push you down towards that 30. But I'd really be targeting this, 28 and a quarter area. If they can hold us in, look for them to push us back up and test that 34 CLVN and try to get us back, into this upper distribution with the first target being the half back at 35.75. We do have the gap, remember, at the 1837.50, which is one tick below the year open. So if we get into this upper distribution and get into value, I'd be looking to take that gap out and try to get above the year open and get us back into a bull year and with a push higher to test that 40 area and see if we can break above it. As always, trade well, trade safe, and we'll catch you on the flip side. Sorry, Howard, I just realized I didn't have my chart up. You had your charts. Thanks for doing that. There will be no live trade room today. I've got meetings all day. Howard can open up the go-to for those that are members of the live room and have the charts going, but I can't. There's going to be a little bit of a break with the live room right now as I make the shift over to get the Stealth Analytics going. I will be making an announcement. I posted it into the Quantum Leap room. We are looking for volunteers to help do a beta test. That I just got the necessary changes done to the system, so it looks like we're going to start a beta test beginning of next week. And I'll be making more announcements on that. For those that are interested, please contact me and let me know that you'd like to be part of the beta test, and I'll let you know privately what's going to be involved with that. Anybody that is part of the beta test is going to get a subscription to Stealth Analytics, for their involvement in the beta test. So you'll end up with probably a subscription for a year, maybe 2 years. I don't know what it's going to be, but we'll make it worth your time and effort to be involved. More importantly, we're going to prove out a trading methodology utilizing Stealth, and that's going to be the exciting thing, because once we've got that, then you've got something that you can print money with. Anyway, everybody have a wonderful day, and be careful out there.